Hi everybody, I just spotted an excellent case study on how to exit a trade on Kogan.com, ticker code KGN on the ASX. First of all, what a great turnaround setup. It was in a long-term downtrend. If I zoom out, you can see just how well my long-term downtrend zone defined an area of dynamic resistance. That is where the price kept getting pushed back down from. We go through the traffic light system through amber, not ready in either of those two places. And we can tell that because in neither of those two places did we get above that long-term trend zone decisively with white candles, good price action, and hold above that trend zone. Not until we got through to May and June here. You can see now, not only is the trend zone back to amber, it's compressing, but we have successfully moved above it, and it is now acting as an area of dynamic support, no longer dynamic resistance. This nice big white candle, this is one we talked about in my Tuesday webinars, plus 130, I never get in all at once, and just really looking after that for other signals. There's certainly one here, there's one here, and one here that you could have added to this position. Even the white candles here and here are all valid entry positions. This one is late as here, even this one, a happy addition. But that's not why I want to talk to you about Kogan. As I said, I see a really textbook exit pattern developing. So in any uptrend, of course, we're happy to hold and to add risk until we see signs that excess supply is starting to manifest itself in the market. And the way that's going to occur is with either black candles or upper shadows. This is the first candle telling us that supply has entered the market. Notice it's also around that round number there at $7. I wouldn't say this is a decisively bearish candle, but certainly that upper shadow is telling us that we have started to find some supply in the market. I think the key candle is this one here. It's confirming supply in the market, but we don't close 2/3 of the way up the candle. We close pretty much near the lows. So the combination of those two candles, particularly when you blend those two candles together, is quite bearish. And for me, if I had a really good run on this up to this point, adding plenty of risk, I think that's a really good spot to lighten the load, so to take 1/3 off the table. And then the next candle, I think, further confirms this idea that we have started to find supply, and therefore, for me, another minus 1/3. And brings us to today's candle, where I feel we're going to close the book on this Kogan trade, at least for the time being. And we know how the model works. When you do have lower points of supply, indicates building supply in the market, or building excess supply more specifically. And between any 2 points of supply, therefore, must be a point of demand. And as we know, the model suggests that on a close beneath that point of demand, that's where your final third goes on Kogan. So really great, really interesting little case study. Hopefully it helps you out in finding some good trades and staying safe in the market. Bye-bye.